Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, this was another wild week with news coming out towards the end of the week of a possible trade deal with China, and that's what really drove the markets up and has been continuing to drive the markets up here in the month of January. As you may have seen in the financial reports, this is one of the best starts to a new year that we've seen since 1987. And with that, you'll see that I've left my lines on the chart from last week's forecast. Do not be surprised when you see that we did not hit any of our price targets, but there are some things that happened that I did forecast, and I'll point those out to you along the way. Let's start with the VIX. Volatility index is a leading indicator, particularly for the S&P 500. And as you can see, down, I'm going to start at the very bottom. Last week, I said that the VIX would most likely start to go up and cross the D line. The blue line is the percent K, which is the stochastic measuring momentum, and the percent D is more or less a 3-day moving average of the K. So when these cross, that gives a buy signal. You can see that today, as I record this on the 18th of January, the lines have crossed, and that tells us that the volatility index would most likely start to move up after that. Now, again, I said we have this target, the end of the line being my target. I'm not going to change that line. I'm going to leave it in place for next week with the end of that line, again, being my target. Notice what happened today. The VIX closed with a doji. We don't see that all that often, but when we do, like we see back here, dojis are a sign of indecision and are generally found at pivot points. So if this turns out to be a pivot point, we're most likely going to see a higher price in the VIX. So being that that's a contrarian indicator, we would expect the S&P to drop. I'm still holding my bearish stance on the S&P, particularly with the ETF here. That's the Spiders, SPY. And notice we have a long stretch of green. This is known as a stale green light. We have also reached an area of resistance for the S&P. So my forecast for next week is that we might go a little bit higher on Tuesday because we have a shortened trading week. Martin Luther King Day falls on Monday, so the markets will be closed. And I do think on Tuesday we might see a little bit of a follow through to the upside, but then I think we're going to drop. And I think that we can drop in a big way. I'm going to erase that line right there. Last week I did say that the percent K here would start to turn. That was the forecast right there, and eventually cross. Well, it took a little time, but it crossed today exactly right on top right there. So watch out for the S&P down below next week. And being that's a shortened trading week, we might have some added volatility, not just because of the shortened trading week, but because today is options expiration Friday. And it's usually the week after the monthlies expire that we have the most volatility. And that brings us into next week as being one of the most volatile weeks of the month. Now with that, let's go to the Russell 2000. I'm just going to go right down the line. Russell 2000, you see, missed the target right there, but the stochastic, exactly like I said it would, is now crossing the D. So we're expecting the Russell 2000 to drop as well. This is a very long and almost vertical stretch known as an upward leg. We haven't seen anything quite like that all year. And so this is leading me to believe that we'll see a little bit of a pullback in the Russell 2000. Maybe some profit taking might occur there, but it is overextended to the upside. And you can see that the stochastic is showing an overbought condition right there, over 80. So let's remove that, and I'm just going to forecast that on the stochastic as well. Going to the Qs, this was very interesting because today Netflix took a big hit and Tesla took a big hit. And so the Qs, which is basically representing the tech sector, we have a spinning top right there. Let me zoom in. Spinning tops like dojis are also found to be signs of indecision, and they found a pivot point. You can see back here was the spinning top, and that resistance area right there is going to give us a little trouble for the buyers next week. So watch for a pullback from that resistance. I'm just going to draw my forecast like that and extend it lower. I'll erase this right here so we don't get any confusion for next week. And the stochastic, again, is right on the %D. So I think that the stochastic oscillator will start to pull back just like that as well. Now, I'm saving the diamonds for last. That's the DIA. It's the ETF for the Dow Jones Industrial Average. Take a look at what we see down here. We have 1, 2, 3, 4, 5, 6, 7 green candles in a row. That has not happened at any other time in the last 12 months. That, again, is known as a stale green light. We're long overdue for a red candle. And lo and behold, where are we? Today's high touched the former trend line right here. And if you've been following along with the Market Guy report, let me get rid of this. I'm going to clean this up a little bit. Let me get rid of this. If you've been following along with the Market Guys, you'll know that this is a critical area for us. That former trend line is now acting as resistance. If we get a significant pullback from that line, I'm going to go to the weekly chart to really show you what this means. We get a significant pullback from that line. That is known as the kiss of death. And I said this before, I'll say it again. I know it sounds a little morbid, but that's when the market fails to get back up and over the former trend line, and it's taken as a failure. You can see we already have a double top. Even if it goes a little bit higher and starts to pull back, that's a complex head and shoulders topping pattern that could give any buyer a headache and maybe even some nightmares if they hold on to the longs. So we are very, very cautious moving into next week and even next month. The old saying is, as January goes, so goes the year. And while this is off to a great start for 2019, any kind of a failure at the top right here is going to mean trouble for, again, the buyers who are holding on to long positions. So my forecast for next week is going to be that we pull back from that resistance and pull back to what could be a new support level right here. Whether or not that support level holds, we'll have to see. But I'm not going to go out on a limb like I did last week and say there's a 99.9% chance we're going to pull back. It just so happened this was the first time in a very long time that we didn't hit the target. But next week, all eyes are pointing to the downside. And again, I think the probability is very high that this stochastic will start to turn lower and bring the market with it. On Monday, even though it's Martin Luther King Day and the markets are closed, I will be having an open house Q&A session at 8 p.m. on Monday, the 21st. If you'd like to participate, just go right there and click on the registration link for the open house, and it'll bring you to a registration page where you just have to put your name in, email address, and such. We do not spam anybody with any kind of advertisements. That's to just get you a reminder notice sent to you that you're registered and that it's starting at 8 p.m. And you could submit your stock symbols, ask me questions about anything, and we're going to have an action-packed hour with our followers, and I think you're going to enjoy that. So have a good long weekend, and we'll talk to you on Monday night. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.